Imagine rolling a die and betting on whether it lands on a 6. Sounds risky, right? What if I told you that Forex trading is like rolling dice, but with strategies to tilt the odds in your favor? Stick around, because I'm breaking it all down using a simple pair of dice to explain how Forex trading works, even if you've never traded before. Hey there! If you've ever wondered what Forex trading is or why people are so hyped about it, you're in the right place. Today, I'm going to explain Forex trading in a way that's super easy to get, using something as simple as dice. By the end of this video, you'll understand what Forex trading is, how it works, and why it's not just gambling if you do it right. Plus, I'll show you how to avoid some massive mistakes that could cost you big time. So, let's dive in. First, let's talk about the problem. Forex trading sounds cool, but it's confusing for most people. You hear terms like pips, leverage, or currency pairs, and it feels like you need a finance degree to understand it. On top of that, there's this fear that it's just gambling, betting money on whether the dollar will go up or down. And honestly, without the right knowledge, it can feel like you're just tossing dice and hoping for luck. The challenge is figuring out how Forex works without getting overwhelmed or losing your shirt. So, let's break it down with our dice analogy. Picture this. Forex trading is like playing a game with 2 dice. Each die represents a currency, like the US dollar and the euro. When you roll them, you're not just hoping for a random number. You're betting on how these 2 currencies move against each other. In Forex, you're trading currency pairs like euro to US dollar, which is the euro versus the dollar. If you think the euro will get stronger than the dollar, you buy the pair. If you think the dollar will win, you sell. It's like betting on which die will roll a higher number. Now, let's explore how this works in the real world. Forex, short for foreign exchange, is the market where currencies are traded. It's the biggest financial market out there, with over $7 trillion traded every single day. That's more money than the entire GDP of most countries. Why does it exist? Well, think about when you travel. If you go to Japan, you need to exchange your dollars for yen. That exchange rate is what Forex is all about. But traders aren't just swapping money for vacations, they're trying to profit from those exchange rates changing. Here's where the dice come in again. Imagine each die has numbers that change slightly every day. One day, the euro die might roll a 6, and the dollar die rolls a 4. The next day, they might flip. In Forex, these numbers are the exchange rates, and they move based on things like economic news, interest rates, or even what's happening in politics. For example, if the US raises interest rates, the dollar might get stronger, like rolling a higher number. Your job as a trader is to predict which way the dice will roll. But here's the thing, it's not just guessing. Good traders use strategies to make smarter bets. Let's say you're rolling your dice, but you notice one die is slightly weighted to land on higher numbers. That's like using technical analysis in Forex, looking at charts and patterns to spot trends. For instance, you might notice the euro has been getting stronger every time a certain economic report comes out. That's your clue to bet on the euro. Or maybe you use fundamental analysis, which is like checking the news to see if a country's economy is doing well. These strategies are like knowing your dice are loaded in your favor. Let's get into the nitty-gritty of how you actually trade. When you open a Forex account, you're not physically swapping cash like at a currency exchange booth. Instead, you're using a broker, which is like an app or website that lets you trade. You choose a currency pair, like pound sterling to Japanese yen, British pound versus Japanese yen, and decide whether to buy or sell. You're betting on whether the first currency will go up or down against the second. The difference in price is measured in pips, which is like the smallest unit of movement in the Forex world. Think of it as the tiniest change in your dice roll. Now, here's where things get spicy: leverage. In Forex, you can use leverage to control a lot of money with just a little bit of your own cash. Imagine you're playing with $100, but leverage lets you control $10,000 worth of dice rolls. If you win, your profits are based on that $10,000, so a small move in the market can mean big bucks. But here's the catch. If you lose, you're also losing based on that $10,000. It's like rolling dice with higher stakes. That's why leverage is a double-edged sword. It can make you rich or wipe you out if you're not careful. So, what's the climax of all this? The key moment in Forex trading is when you realize it's not about luck. It's about discipline. The biggest mistake new traders make is treating Forex like a casino. They jump in without a plan, roll the dice and hope for the best. But successful traders, they study the game. They practice with demo accounts where you trade with fake money to learn the ropes. They set stop-loss orders, which are like safety nets that automatically close your trade if things go south. And they never risk more than they can afford to lose. It's like knowing exactly when to walk away from the dice table. Let's talk about a real example to drive this home. Imagine you're trading US dollar to Japanese yen, the dollar versus the yen. You notice the US economy is booming, and the dollar is getting stronger. You decide to buy the pair, betting the dollar will keep climbing. You use a chart to spot a trend where the price keeps bouncing off a certain level, like a die that keeps rolling close to a 5. You set a stop loss to limit your risk and a take profit to lock in your gains. A week later, the dollar shoots up, and you make a tidy profit. That's the thrill of Forex. When your strategy pays off, it feels like you cracked the code. But here's the flip side. Let's say you didn't do your homework. You bet big on euro to US dollar without checking the news, and suddenly the euro tanks because of some surprise election result. Your account takes a hit because you didn't set a stop loss. That's the moment you learn Forex isn't just rolling dice. It's about having a plan and sticking to it. So, to wrap it all up, Forex trading is like playing a strategic game with dice. You're betting on how currencies move against each other, but instead of relying on luck, you use tools like charts, news, and discipline to make smarter bets. It's not a get-rich-quick scheme. It takes time to learn, and you'll make mistakes along the way. But with practice, you can tilt the odds in your favor. Start small, maybe with a demo account, and focus on learning one currency pair at a time. The key is to treat it like a skill, not a gamble. Visit the video description for help and recommendation. If you want to dive deeper into Forex trading or see more tips like this, hit that subscribe button.